As soon as we start investing in the market and putting on trades, we realize very quickly that every decision we make is our responsibility. I mean, whether you read a great research report, whether you got some really good advice, or you just made a great analysis, at the end of the day, when you hit buy or you hit sell, it's your responsibility, it's your decision. So now in good times, you feel great, you feel pride, you feel joy that you're able to kind of put this decision on, make it work, you have this profit that you can enjoy now. In bad times, it's also your responsibility, and that stress builds up as those losses mount, or you feel confused and you're not sure what to do next. And so this is normal, but if you want to become a better investor, if you want to enjoy trading and investing, you need to take control of that stress. I know for myself, and I know a lot of people who trade, yeah, we all do it to make money, but at the end of the day, we also typically love to trade and invest. I mean, I just love the process. It's all I've ever done, and it's all I can picture myself doing. Now, in fact, if you take a look at most professional traders, people who will say worked on Wall Street, there's a fairly high rate of people on Wall Street who end their career or change career young. And that's a result of burnout. That stress, that pressure builds up. And they just say, like, I made my money, I don't want to do this anymore. Even though they have a good system, a good plan in place, it's not the losses, it's the burnout, the pressure that kicks them out of the industry. It doesn't have to be that way. If you take a look at Ray Dalio, who's a man in his 70s, he's still around the market, he's still making decisions, and he loves it. He's gotten that stress under control. Now, to get it under control, you have to really understand what drives stress. It's not just losses. That's what most people kind of associate stress with, but it's not just that. Think back to the last time you had a really good trade on, one that was really working well, you had really big open profits, maybe you had a little more concentration than you normally put into a position, and it just kind of triggers in your mind one day. You take a look at your P&L, you say, whoa, I'm making that much money from this position? Suddenly all that stress and anxiety starts to come in. You ask yourself, hey, do I really want all of this kind of profit to go away? I mean, it's really difficult to make this much money. And then at the same time, you have kind of that thought comes in where you say to yourself, what if I'm like on the cusp of some really major trend here, and this is gonna go far beyond where we are now, and you're caught between these two decisions. Even though you're making money, that stress and that anxiety starts to come into the equation. So you see, it's not just losses that cause stress. It's whenever you have a feeling of a lack of control. When you feel like your destiny is not in your hands, you don't know what to do next, that's what triggers stress. And so, you can really look across the spectrum at anybody who has a lot of decisions to make, and you'll see that they'll have a lot of stress associated with their business. If you look at any kind of entrepreneur where they're making a lot of decisions regularly, they can tend to be really high stress people. And at the end of the day, I always say anyone who kind of begins to trade actively or doesn't buy and hold for the long term, you've just started your own small business whether you realize it or not. You're running a strategy, it's a specific strategy, even if it's not well-rounded, you've kind of entered into the market with a strategy. That means you're running your own business. So you have all of these decisions to make. Now, I was recently reading a book by Patrick Bet-David called Your Next 5 Moves, and he kind of discusses the early days of when he was starting his company, which he just sold a couple of years ago, I think for a couple $100 million. And he talks about the amount of stress he had in those early days. Now, what kind of shocked me was I felt like it was a fellow trader talking to me about their process. That's how kind of bang on it felt. So here, let me read to you what he said in this excerpt in the book, and you'll see how much you can relate to this. Not long ago, I was a high-strung CEO with a horrible temper. In 2013, I had a panic attack that sent me to the hospital and recurred every day for 18 months. The main cause of the panic attack was indecision. What kept me up at night and made my heart beat faster wasn't my workload, which I could handle. The problem was that I could never stop thinking about issues. I would replay every decision and every conversation over and over in my mind. It was eating me alive and damaging both my business and my personal life. I had no peace of mind because I was so worried that I would make a wrong decision. I know what it's like to work 18-hour days and still feel as though you're spinning your wheels. Like most of us, I spent my early career chasing certainty and treating every issue as though it were black or white, as though there were one right solution for every problem. If only I could figure out what that was. It was as unproductive as it was exhausting. If I could learn how to process issues, then you can too. I'm going to show you how to solve any problem calmly and effectively, no matter what the stakes. Building the business requires you to slay many dragons. Problems are inevitable. You better get a grip on solving them. To do so, you must be processing issues constantly. Processing is the ability to make effective decisions based on access to information at hand with the highest odds in your favor. Processing is about subjecting every difficult choice problem, or opportunity you face to a rigorous mental analysis. Processing is playing out strategies, seeing the hidden consequences, and sequencing the series of moves to permanently solve problems. So when I read that excerpt from Patrick Bet-David, it really resonated with me. I mean, I could really feel what he went through because I had been through that many times in different ways, similar ways. You know, I can actually remember the last time I went through it. I remember waking up, it was like 3 in the morning, heart racing, like, you know, upset stomach. And I don't know about everyone else, but when I have big positions on in the market, I mean, I dream about the market. I'll see quotes flashing, I'll see charts, I'll see P&L. It could be a really good day, it could be a bad day. Typically when things are not going so well, the dreams are closer to nightmares and things are not working out. So I wake up from this bad dream, you know, heart pounding, upset stomach. I remember going to check my phone to check the quotes. NASDAQ's trading lower overnight in the futures and overnight trading. So I just know tomorrow's going to be as bad as I anticipated it to be. And I just knew I was really offside. Like the ideal sell point was a while back. And now I'm kind of dealing with a situation where there's no really good outcome. I mean, yeah, you can just limit your risk, get rid of everything, but we all know, yeah, that'll eliminate the stress, doesn't fix the problem. And so just knowing, like, what do I do now? I put myself in this bad situation. It came down to kind of, like I said, that feeling, that loss of control, which is not a lot of fun. And you know, what really makes it really worse, I think what makes it really extra frustrating is, you know, for most people running a business, they can talk even to their friends, significant others. When you're trading, you kind of end up in your own world. I know, like, especially when I'm losing money, you know, I don't want my wife to kind of feel like, oh, things are not going well. You're just kind of, I feel like I'm just transferring that stress over to her, and it's not exactly going to come back to me with some kind of like, you know, great trading strategy to fix. She knows I know my business, and it's just kind of, you feel like, oh, let me just kind of bottle this up and deal with it and smile and not let anyone else realize what we're going through. But it's difficult to go through. Look what, you know, Patrick Bet-David was talking about. In his case, 18 months, going to the hospital multiple times. I had many times where I had that really bad night and all day just feels like a torturous event. I remember after that last time I said to myself, I'm never going through this again. I'm going to take losses. Sure, I'm going to have drawdown. I'm not going through another night. It wasn't really a night, it was a few days. I would go through these episodes. And every time I'd go through a high stress episode, I always end up with a really bad flu afterwards. I kind of looked into it. There's an actual, you know, going through high stress will actually weaken your immune system and expose you to you know, bacteria and all these different things that you wouldn't normally get sick from. So I promised myself never again. And so I kind of got to work. I said, this is a weak part of my strategy. I need to fix this. I have to have something in place so that I don't go through the stress again. And so this is how we kind of came to this video. You know, these are the 5 ways I said, this is how I'm going to address my stress and get rid of it permanently. So let's talk about the 5 ways that you can really take stress out of your investing. So first up, I think the important thing we all need to do is really articulate our strategy. So that really means knowing what you're looking to capture and also what you're willing to miss. So, you know, when we're watching the market every day, it's only normal to kind of see, like, even if it's a terrible market, there's going to be some stocks that are doing great. Or even if you're doing pretty well with your stocks, there's some stocks that are going to be doing better. And so that leads you in this situation. Everything we're going to talk about here are going to be ways to kind of regain that control, to feel like you're the one in control making the right decisions. So step 1 is, what's the goal? What's the real point of your strategy? And I'm not talking about I'm looking for growth stocks, or I'm a value investor, or I'm a technical trader. No. What are you looking to capture? Write down the criteria. If you don't know what it is, you know, this is a good time to kind of start figuring it out and putting pen to paper and trying to figure out what it is. But what are you trying to capture? And if you're trying to capture that, what are you willing to miss? So for that, you know, in my case, for example, I was a day trader for years, swing trader. Now I try to position trade. I'm looking to kind of build big positions in growth stocks and hold them for more extended periods of time. But I like to build up with incremental buys so that my risk is never too big at once. But as a result, you know, there's going to be certain moves, let's say in a coal stock or an oil stock or in a biotech stock that doesn't have the typical characteristics that a growth stock will have that will precede its big advance. I can't possibly be an expert in every single domain. So I have to be willing to miss out on stocks that fall outside of my criteria. And I know what my criteria is because I've set my goal of exactly what I'm trying to capture. So once you take that first step, you eliminate so much noise. If you look at a stock that's up 12%, you're not going to say to yourself, why didn't I catch that? You know why you did it, because it's not part of your goal. It's not part of your process. It's not what you're looking for. I mean, you could be an athlete. Are you training to be a football player? Are you trained to be a hockey player? Or are you training to do Mr. Olympia and be a bodybuilder? I mean, you can't be training for Mr. Olympia, but then expect to be a fantastic hockey player. It's a different skill set with different outcomes. So figuring out that goal and acknowledging on paper what you're willing to give up and miss is going to eliminate a lot of stress from your plate. Number 2, limit the pool of possible investments. So whether you use fundamental analysis, technical analysis, market data tools, you have to say what stocks are going to be possible investments to begin with. Never mind if you're a growth investor or this and that. If you're someone where you say, look, I want a minimum amount of liquidity in the stocks I trade. I'm going to be putting on an X amount of size. I don't want to be stuck in a stock where I can't sell this thing because I got too much size. That's right away, you can eliminate everything that is below your threshold of liquidity. And that's one decision off of your plate. Is fundamental analysis very important to your process? If it is, and you say, I need at least 20% earnings growth in a company to pay attention. Okay, great. Eliminate every other company. Those are all the decisions you no longer need to make when looking at those companies. Is technical analysis a critical part of your toolbox? Okay, great. If you say, I won't touch a stock below a 200-day moving average, fantastic. If there's 10,000 stocks, maybe you just eliminated 5,000 stocks. All of those decisions are off your plate immediately. Write down the minimum criteria that you're willing to accept from your possible investments, and everything you eliminate is one step closer to getting to your end result, but more importantly are a bunch of decisions you don't have to make anymore. So by eliminating that pool of possible investments, you make your life a whole lot easier. Right away, you eliminate stress. Number 3, make risk management and portfolio management fixed rules in your process. One of the most difficult parts, one of the parts of the investing process that's most susceptible to emotions is risk management, portfolio management. That's why most traders will always going to fight with the risk manager on the desk, because it's just about that time you want to go a little bigger than normal. The risk manager is going to come and say, look, you can't put on a position that size. Or when your losses are getting too big, and you're saying, no, this one's going to come back. The risk manager is going to come around and say, oh, no, that loss is too big, your drawdown is too big, time to kind of fix that up. So especially if you're trading for yourself, you have to be your own risk manager, your own portfolio manager. And the tools and the part of being risk management and portfolio management are the parts most susceptible to emotions, because they're most needed when you're at these portfolio extremes, when you're taking a big loss or making a big gain, or you're putting on very big concentration. That's when your emotions come out, because again, you're extra committed to the outcome. And that's when you least want emotions to be a part of your process, because you want an optimal solution, not just what you feel is good or what you hope turns out good. So I would really recommend, if you want to eliminate a lot of stress out of your life, automate with hard rules all of the risk parameters, all of the concentration levels, all of the portfolio management decisions as part of your process. Look, the fun part of what we do typically is finding that great investment, layering in, putting on those buys. It's not necessarily sitting down and going through the risk management process. That's something that's typically mathematically driven and is there to kind of protect you. It's like same thing with a car. I mean, we love to go fast. We want to be able to get into the corners and pull fast turns. Braking is not the fun part of driving, but without brakes, you're going to crash, right? So you need that risk management. So automate your risk management and portfolio management. You're going to eliminate a lot of risk. If you don't have a risk management or portfolio management process in place, you have a huge blind spot to your strategy that at some point is going to knock you out. So the first thing you got to build out is a good risk management and portfolio management process, but it's got to work with your goals. So you can't put in a risk management process for the sake of risk management. If you say, I'm looking to kind of capture big trends in stocks, I want to find the next Apple, but I'm only going to take maximum 1% loss on any single trade. Well, you're kind of looking for two things that are, that can't work together. How could you want to capture a 400% advance but never lose more than 1% when most stocks will move 3 or 4 or 5% in a day? So whatever you build out should be a black and white process, but that works with your stated objective and goal. Next up, plan for your worst case scenario. And then actually, whatever you just wrote down, make it 20 or 30% worse, because it's probably going to be worse than what you expect. Now, worst case scenario is not just losing money. Worst case scenario is for every strategy we put on, you should know the pros and cons of your strategy. So again, if you're a trend follower, like I just mentioned, you're trying to find these great growth stock advances, the biggest risk to you, especially if you have limited risk, if you use stop losses to kind of cut your loss, you're not likely to run into a situation where you have a 50% loser, because you're going to cut your losses if they're not going your way. You're a trend follower. The risk to you is a choppy market. So if you're kind of getting into there and you take 1 loss, 2 loss, 5 loss, 10 loss, as the market just chops back and forth, back and forth, back and forth, you'd be amazed how quickly those small losses can add up to a huge portfolio drawdown. So if your worst case is a choppy market, you have to go back and stress test your portfolio and your process in other incredibly choppy markets. How do you gauge how aggressive you need to be? How many trades do you put on? When do you kind of limit your overall exposure? How many trades do you put on in one day? In a choppy market, you need to control that frequency, or you're going to just cut yourself up, into pieces. For other people, where let's say you're a value investor and you're buying a stock as it's coming down and it seems valuable, what's one of the biggest threats to you? Well, the biggest threat to you is, the joke of value investors, as you buy it as it's coming down. If it falls further, well, it's great, it's even more valuable, but you're taking more and more losses. What if ultimately the stock you thought was a good value investment turns out to be complete garbage? And sometimes we're all going to be, no matter what the fundamentals are, anything can hit. It can be something that's outside the balance sheet. It could be COVID, hits, right? Even if there's a great company, had all these fundamentals that were fantastic and it was a great valuation, this new black swan event totally changed the outlook for this company. What are you going to do in that situation? So every strategy has a worst case scenario. You need to plan for it. If you have a process in place for that, you'll be able to kind of survive long term. In the back of your mind, you're not going to feel that fear every day of, what if I enter an environment where my tools are not going to be effective? You already planned for that. I know that's the way I feel. If I'm into this kind of market, yeah, it's going to suck. I'm not going to be killing it, but I'm going to get through it. The market's in a cycle around. I'll have another really good opportunity to kind of really get back and kill it again. Now, the last thing I would recommend is every year review your process. Have a time where you look at your process outside of market hours, ideally when you have no positions, if it's possible, if the market lets you, and go through, how did you do in the past year? What part of your strategy can be refined? What part of your strategy can you remove decisions from? The more you can pull decisions out of your process, the less you're going to have stress on your plate. If you look at all the 5 things we just spoke about, it's all about limiting the number of decisions you have to make. The less you limit decisions, the more you're in control and the more you have an identifiable process. Think about processes are what make something valuable. Look at McDonald's, one of the most valuable restaurants in the world. They make hamburgers and French fries. It's nothing special. What made McDonald's McDonald's? It was their process. While everyone was running kind of mom and pop shops, they came out, they industrialized the kind of the cooking and distributing of food, and they built an incredible process right down to how you stand in the kitchen, how long everything needs to cook. Everything was written out, a process was built, and that brought immense value to hamburgers and French fries. So working on your process is really what's going to kind of bring value to you, and at the same time remove the stress from your trading. Take back that control. You only take back control by knowing how you're going to react to different situations and reducing the number of times you need to make a decision of what you're going to do when something comes up. This really transformed how I approached my process. I mean, I came up with concepts like my dollar stop, where I always know the maximum amount of actual dollars I'll lose per trade. It's an interesting thing. We all do our calculation in percentages, but our minds typically work in dollars. You think of, I could have bought a brand new car with that money, or I could have gone on a beautiful vacation with that money. You never think like, I could have, with that 8%, I could have done this. No. We think in dollars. So I said, I had to kind of bring my stop loss to a point where if I lost money, it wouldn't bother me. That amount of money wouldn't bother me. So you need to create all these mental hacks, all this process for each element of your strategy, so that you're only making the decisions that matter, and the decisions that you make are within a repetitive process with the best data at hand, very much almost identical to what Patrick Bet-David spoke about in your next 5 moves. And so you don't want to go through that stressful period. You don't want to go through that period where you wake up at 3 in the morning like I spoke about. You want to enjoy trading. You want to make better decisions, and it's all going to come about by eliminating stress from your process. If you enjoyed this video, please like, subscribe. If you want to learn more about my process and other things that I do, there's my website, carusoinsights.com. I'm also on Twitter at trader_mcaruso. Appreciate your time, and I really hope that this helps to get that stress out of your process, because It's one of those things that most people don't talk about, but it's such a critical part of the journey. It's such a critical part about making more money when your process is better and having fun doing it, which is what we're all here for. I mean, it's great to make money, but if you can't stand what you do, you're probably not going to be the best that you can be at it. So I hope you enjoyed the video. Talk soon, and we'll see you soon.